Hello everyone, and it's nice to have you back with us again here at ACY Securities, Sydney, Australia. My name is Clifford Bennett, Chief Economist, ACY Securities, and today I'm here with a colleague who really punches quite strongly in the market, Peter Pan. Nice to be sharing the camera with you today.
Yeah, hi. Hi everyone, I'm Peter Pan and I'm the market analyst for ACY Securities. And for Mandarin speakers, 大家好，我是你们的分析师 Peter Pan 那么非常荣幸今天能够和 Clifford 坐在一起，和大家讨论一下今天的一个市场最近的一些市场行情。
Yeah, hi Peter. And basically, Peter and I thought it'd be a great idea because we have slightly different perspectives on markets, and both very experienced. And I kind of wanted to start with, okay, there's a lot of tragedy going on in the world at the moment. Let's slightly put that aside for the moment. And what do you think about energy prices and oil? Do you think this rally, the move we saw up towards 150, was that the high? Or is this latest little rally the start of a move to that vicinity again or even higher? Or is it just we're going to go sideways in this range? What do you think?
Yeah, I think this is the main point of the market. The whole market is surrounded by the energy price, and the energy price is influenced by the war. We can see when the negotiation or the war between Ukraine and Russia goes strict, and the energy price will goes up, and it will influence all those markets. Like the share market will going down, the gold maybe goes up, and the most important part of it will influence the inflation. The inflation is and will be influenced by the energy price mainly. So I do think the energy price will still going up because I don't think the Russian and Ukraine war will get back into place quite fast. So this is my main point. The energy price will still going up.
So you'd be suggesting caution on stocks still, as I am as well. Yeah. Okay, so we're a little bit similar there, but I noticed you're kind of really pushing that energy is going to be the driver of inflation going forward. I'm seeing food as being, and we all know these forces are happening, but where Peter and I might be different to most of the other commentators you're reading or watching is that we feel the food and energy price gains, inflationary pressures are going to be persistent, all through this year and maybe into next?
Yes, of course. Actually, I also think food price will goes up more faster, or not faster, just more stable than energy price, because energy price could be influenced by the sanctions, right?
Yes.
But the food price for current situation, both Ukraine and Russia has already stopped the food export. So the energy export doesn't just stop quite completely. Yes, so the food price, I think, yes, it will more influence inflation.
So I just want to throw another two little things in there. We don't yet know whether Putin will at some time, President Putin or Russia at some time, will dial down the gas supply to Europe, which would again send another energy shock through not only Europe but the world. But on the food, right, you're feeling this has already happened.
Yes.
But I don't think the markets have priced in that there's actually the risk of food scarcity in 6, 12 and 18 months from now. So we've had a preliminary shockwave to the upside, but I still get this feeling that out there in the market amongst our viewers and traders, there's still this kind of hopeful, or maybe it's just a more positive, I mean it would be great if it was more realistic, but more positive feeling that the war in Ukraine won't be a long-term ongoing phenomenon. And I think that could be an error.
Yes.
Which would continue to deny food supply, which means the price gains we've already seen in wheat and soy and linseed could actually, they could go to new highs as well.
Yes. Actually, that's quite what I also think about, because we can see that the energy price, the gold price, has been dropped quite fast in last week, right?
Yep, yes.
When the fourth negotiation between Ukraine and Russia has come out. But we can see the negotiation has lasted the whole week without any conclusion.
Yes.
So that's the reason why the gold is going back, the energy price is going back. So the war has not been fully priced in.
Correct.
Yes.
Correct. And that's such a big thing for us to be saying, because a lot of people out there are thinking it's a buy the dip or look across the valley situation. And particularly both of us have been saying all along that this conflict, sadly, unfortunately, is going to be long lasting. And as you said, the peace talks went nowhere last week. Well, they made some gain, but when you look at the two parties' sort of core objectives in the peace talks, they are very far apart. Peter, so are there any different, or the markets we're talking about, just to sort of, is there anything else that you find out there that's of particular interest at the moment you'd really like to talk about?
Just beside war, of course, we are focusing on the Federal Reserve's decision. The main point is how fast they will increase the interest rate. So just like last night, the Port-Vila just said maybe he will increase the 50 basis point in the May meetings.
Yes.
It is a very fast decision to increase the interest rate, but I still don't think it's enough, because we can see the inflation is influenced by the food, is influenced by the energy price, but it does not stop, right?
That's right.
So I do think the Federal Reserve current plan of interest rate hike is not enough. Even not yesterday's decision.
And it's so late. It's so late.
Yes.
It was June, July last year. We started saying to the world, the Fed should be hiking interest rates now in small steps so it doesn't have to chase and panic further down the track by falling behind the curve, right?
Yes.
And that is exactly what it's happened. In fact, the headline of one of my pieces I wrote today was "The Fed is in panic."
Yeah.
The Fed is panicking. And those Powell comments, it's almost as if they've just woken up with a startle and realized the nightmare is actually reality, and they're so far behind the curve, it's ridiculous.
Yeah.
So one, they're going to have this sort of accelerating curve of interest rate hikes in panic mode. And now the really sad thing is that those interest rate hikes will help cool the economy, cool other inflationary pressures, but those interest rate hikes are not at all going to stop the inflationary pressures of the energy and food shock from the war. Yeah. Basically, raising interest rates will do nothing to control that inflationary force, which means that the Fed is panicking when it can't do anything about it. And that's a real squeeze for the market, because it means that Europe can have a recession, you can have slowing economic activity, but you're going to have this horrific situation of the Federal Reserve raising interest rates aggressively and it not working and thinking it needs to raise rates even more aggressively.
Yes,
yeah.
Yes, that's it.
Yeah. So that's the happy news from ACY Securities. So just to wrap up quickly, I'm feeling this stock market rally of the past week is finishing about here, and it could be the last big rally of the entire year. How's that for cheering everyone up? What do you think, Peter?
Yeah, I also think so, because last night we can see the stock market, the whole stock market has going down so fast. Just after Powell said something about the increase of 50 basis point.
Yes.
And in last week, I talk about something about the market to my audience. I said the economy, not only the US, but the entire world economy is like a truck. So because of the QE, because of the low interest rate, it is too fast. And now the Federal need to press the brake.
Yes.
And the brake, you need to know, there is two methods of it. One is push it very hard, and the other one is push it lightly. But the current inflation requires the Fed to push it hard.
Yes.
And it will make the economy more recession than everybody. I think
it can
most
really
of the
compound
market
into a very ugly situation.
Yes. So I do think the higher the inflation and the Fed will need to be more aggressive for the interest rate hike, they will press more harder for the brake, and the economy will just go down further.
Yes.
And the stock market is not in the bull market.
Yeah, it's a little bit like I use the analogy of a super tanker or an aircraft carrier. To change direction, it takes time, but a super tanker especially, it takes a long time to change direction and change speed. And that's what the US economy is. And the captain, Jerome Powell, is hitting the brakes or reverse thrust way too late. It's almost like a super tanker is coming into port and they've left it 2 miles too late to start slowing down. And now there is an unavoidable crash of some kind lying ahead of us.
Yeah.
Thank you very much, everyone. Share from Clifford Bennett, Chief Economist, ACY.
Thank you, everyone.
Thank you.